Some of the things that I want to talk about, I talked about the loan process, and I wanted to give you a comprehensive feel of what that would be if you're a first-time home buyer, if you're going through the process again for the first time, or if you haven't done it for a while. Here are a couple of steps and things throughout the mortgage process that I want to distinguish for you and kind of break down for you. So here they go. The loan process always starts with the loan pre-qualification. Now, a pre-qualification is different than a pre-approval. Now, everybody says, well, it's kind of like buying a car. I want to find the car first and then get approved for my loan because I'm not going to have a problem doing that. Well, that's not necessarily how the game works. Okay, definitely, if you're looking for a house and you want to do it right, get pre-approved for the home loan first, which means you submit all of the documentation, get your credit report run, you're working with an experienced loan officer to find out exactly what you can qualify for, because sometimes what you can qualify for and also what you want your monthly payment to be are two different things. Also, depending on your residency and your where you're planning on purchasing, it can make a difference in your down payment options and your residency on how we call the house, whether it's a primary residence or a second home. Now, I've had a couple of situations where that's kind of skewed the buying power of a couple people, and I'll get into that in a little bit. But really, what's the difference between pre-approval and pre-qualification? A pre-qualification is just a basic interview. It's a short interview without running your credit of what you could possibly buy. We talk about your debts, your income, your credit, whatnot, but we're not actually running the credit report or collecting the documentation to verify that. The actual pre-approval is a process by which we take the full application, we run your credit report, we know what's on your credit, we get your last 2 years' tax returns, pay stubs, and all the documentation that we need, and you're actually pre-approved. Now, that's not a full pre-approval by an underwriter because we have to have, the appraisal, preliminary title report, that is, and we also have to get the escrow instructions and some other things. But generally, you're basically good to go. Now, there are certain situations where we have to have, other things taken into account after the offer is accepted, but this is a good 95% chance that you're actually going to be able to get the loan and it'll close. Now, from the pre-approval process, you're going to go and start looking for homes with your real estate agent. At this point, with the pre-approval, you know how much your payments are going to be, you know how much your down payment's going to be, you know basically what the interest rate is depending on the shifts in the market, but you have a pretty great idea of what range you need to be in and what house you want to buy. And the reason that we do this up front is so that you're not looking in a $250 range if you only want a payment for $160. So there's a lot of emotional attachment to buying homes and looking at properties, but a good mortgage planner and a good real estate agent is going to encourage you to put these figures together and get what I call the game plan. And the game plan really nails down exactly what your budget's going to look like and what you can actually afford. Because with different things like from very recent history, Mello-Roos taxes is different for different properties. HOAs can affect your qualification. The tax basis, is your property in a flood zone? These are all things to take into consideration when you're looking at specific properties. And if the ratios are kind of tight, you need to tell your agent, hey, if I look in Talavera, they have a decent, HOA and they have the Mello-Roos. There are some other qualifications that you need to look at. You may need to look at a lower purchase price amount in order to qualify for that same property. So that's a good what I call a gauge for getting pre-approved and actually putting the deal together so that you're setting yourself up for success. Okay, so you find the home, you make an offer with your agent, and your offer is submitted. Your offer comes back, it's accepted. You agree to all the terms. You're going to buy a house for X dollars. You're getting a seller credit towards your closing costs. You know how much down, how much per month, and you go to open escrow. Well, once we open escrow, we get the appraisal ordered, we get your preliminary title report and your escrow instructions back. You send in your money for the deposit, anywhere from $1,000 up to $3,000 or 3%, depending on whatever the terms of the agreement are. And this is about the time that you're starting to do your due diligence. You get your home inspection done, which Charlie Sweet from Home Sweet Home Home Inspections can help you out on. We love them over at Home Sweet Home. And they do all of your property inspections, make sure that you know what kind of a property you're getting into. And we talked about this on last week's show as well. You don't want to buy a house with a cracked foundation or, any crazy thing that might be out there. You want to know exactly what you're getting yourself into. Okay? So you get the inspection done, you get the appraisal done. Now, the difference between an appraisal and an inspection is very great. Okay? Your inspection actually looks at the condition of the home so that you're prepared for what you're getting yourself into. And the appraisal for the home is basically for the bank to decide what your value of the property is and possibly what repairs need to be completed before you close escrow. So those are two very different things. At this time, we're going to be going into the processing of the loan. Once we get the appraisal, the inspections back, we're going to verify your income, assets, your employment history, and all that stuff. We're going to verify that. That's what we call the processing part of the loan. And throughout the processing part of the loan, this is going to take probably the most amount of time because once we have everything together, we submit it to underwriting. And the underwriter is actually the person that's going to approve the loan. And the underwriter actually looks at all the documentation that we have there, looks at the loan, and approves the loan. This normally takes about 2 to 3 days. So processing of the loan can take anywhere from 7 to 10 days. And at this point, we're gathering everything up. And then the underwriters approve the loan. We approve the loan, go to loan documents. You sign the loan documents thereafter. And then the day after you sign your loan documents, you're going to wire your funds into escrow. This is the time that you actually get your wiring instructions from the escrow company and you know how much you need to come in with, all of your closing costs. You wire your funds to escrow, then you close. We close the loan about a day after that. After that, we fund your loan and then you record your loan or you record the deal on the following day. In California, we fund one day, we record the next. On Fridays, we can actually do it all together. So that's kind of a unique process for California, and that's a brief overlook of the loan process and loan approval. This is the Mortgage Hotline on KNews FM 94.3, the Desert's News Talk Superstation.